Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 9th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of data going on today here or abroad for the most part. We did get Great Britain's manufacturing production came in slightly lower than expected at 0.3%, was expected basically unchanged. And here in the United States, we have preliminary non-farm payrolls came in slightly better than expected, along with preliminary labor costs. The other thing that we had was wholesale inventories, which dipped a little bit, but again, that is the one that I really don't even look at. At the end of the day, it just kind of tells you whether or not, or all it tells you is that manufacturers are lowering their inventories. It doesn't really say whether people are buying or they're just producing less and moving old inventory out the door. So that one's a hard one to really discern as to what's going on in the economy. Anyway, on to the overall markets. We got crude oil right here, just slightly in negative territory, down 23 cents at $42.79, but looks like it could be topping out a little bit of that bounce after a couple of weeks of selling pressure. It looks like it may be starting to wane a little bit. There's still a lot of oil out there as we speak. Gold pushing higher, up about $4 on the day. It's really hard to tell what's going on right now. As you can see with gold pushing higher, bonds are pushing higher, as you can see here, almost up a point on the day, slightly off of that by about 6 ticks. But the overall market here, bonds are not giving up on this equity rally. It's who's going to win this. Bonds, I think, are holding high because equities are just at this historical high and they have to give. So as you can see, with this massive rally since the Brexit, there's not been a breather for the most part, and we are well overextended to the upside from this value area high. So the overall market is really long right now, very complacent with volatility being low. That just all of those factors added in are really waving a red flag for me. As you can see here, the NASDAQ making another historical new high today, 48.07, just unrelenting. And yesterday we talked about this. E-mini S&Ps couldn't print the overnight high, which led me to believe that that was going to happen. It happened today during the day session, printing a new high of 21.83, but they're only up about 3 points on the day. As you can see here on the breakdown of the 15-minute chart of the E-mini S&P, printing that new high right here during the day session. So that was a historical day session print, beating that overnight high from Monday night, Sunday night into Monday night, or Monday morning. But E-mini S&P is still up on the day by about 3 points. So everybody's kind of like this. I've been talking about this rubber band getting wound really tight. It looks like the bonds are signaling that and pushing higher by almost a point. Gold catching a bit of a bid. It looks like some of the smart money in my mind is really starting to get nervous about that. We're not seeing it show up in the VIX or in the volatility measures, but at the end of the day, these are the indicators that when you see the cats and dogs living together, usually bonds, in my eyes, are the ones that are the precursor, and people are putting money into a little bit of safety. Same with gold pushing up higher today. So we'll have to see who wins that battle overall. On the earnings front, we had COH, which is ticker symbol COH, come out with earnings. I covered this early this morning. I did the COH August weeklies that expire on the 12th and did the 39.44 and a half strangle. I collected 80 cents for that yesterday and bought it back this morning for 20 cents. That was right on the open, so it was kind of actually a little bit lower. The market kind of rallied as I was trying to get out of that trade, so that helped me out. You might be able to do it for a little bit better now as the theta comes out of those and the volatility continues to contract in COH, but I cover all of these within the first 15 minutes if I have the opportunity, and COH allowed me to do that. I actually put in the order before the market opened for 20 cents and just kind of waited for it to get hit on that, and got it in the first 5 minutes or so. On to a trade that I've added here, LULU. It's just kind of flatlining, and so I decided to, with this historical highs, go in and do a strangle in there as well. It has pretty good implied volatility percent. It's up in the it's just below 50. It's about 49 point something. So really the only thing that I can find out there with high volatility that doesn't have earnings. So I went into this with a strangle just to kind of capture this trend that it's been in. And I have I put on the September 70 puts with the 87.5 calls to create that strangle. Remember, the lower strike is the puts, the higher strike is the calls, selling both of those naked, and collected $1.95 for that strategy. I still have on the August 70 puts that I'm long, so I'm actually defined risk on that lower put that I'm naked there. So if I do get a pullback, that actually fits really nicely with that one because I really have no risk to the downside. I bought those puts a long time ago. They're almost worthless, but I'm going to leave them on just in case we do get a big sell-off. And I can't see there being much more momentum to the upside. We don't have a whole lot of economic data coming out right now, and I don't know that any great economic data would really push this overall market much higher. And if we get really bad economic data, these retailers are probably going to suffer from that. The overall market may rally because they figure that the Fed is not going to raise interest rates anytime soon, which could cause euphoria in the equities and push them much higher. But if we get great economic data, the overall equities might throw a bit of a tantrum in that the Fed is more likely to raise rates. So we'll have to see how that all works out. That's all I've done pretty much right now with this low implied volatility market. I have a lot of debit spreads and long options, which I don't really like to do. It's just a low probability trade, so that's why I am not being super active, although it pains me to say. But that's what we do. You got to take what the market gives you, and right now the market is just, in my eyes, too much risk for the reward on this upside move. So I'm waiting for a bit of a pullback, hopefully get some volatility to expand so I can throw a lot of money to work. All right, that's about all I got for you guys today. Friday's webinar, we're going to be doing it on the long call butterflies. That's going to be a really good one. It's going to be able to take advantage of some of this. If we could see continued consolidation and trending sideways, that'll be a good one for a strategy like that. Wouldn't really work with Lululemon because it actually could work with Lululemon actually because it is trending sideways. I'm trying to capture this market with this and lean on my August puts also to define my risk to the downside. I'm still bearish on a pullback. So in that regard, this butterfly is great for a sideways trending market that we're going to be looking at. All right. So stay tuned for that. You can check it out at protraderstrategies.com. I'm also going to be doing a Traders Expo. You can stay tuned for that. We'll give you more information as it comes out. That should be a lot of fun. I'm going to be doing a couple of videos here in the near future, webinars for that. All right. If you can't take that, take it easy.